That would be the most ambitious housing plan since World War II. Here's whether the math actually works. The plan is called Build Canada Homes. It's a new federal agency with a single mission: build affordable housing at scale across the country. The government committed $25 billion in debt financing and $1 billion in equity to get it started. The target is 200,000 new affordable rent-stabilized units plus 200,000 preserved existing units over the next decade. CMHC says Canada needs 6 million new homes by 2030 to restore affordability. That requires roughly 500,000 completions per year. The previous high was 260,000 in the mid-1970s. Canada has never come close to 500,000. So the plan is asking for nearly double the best construction year in Canadian history, sustained for a full decade. Here's what the plan actually does. First, it cuts development charges. The federal government and Ontario agreed to cost match a total of $8.8 billion over 10 years, specifically for housing-enabling infrastructure. In Ottawa, this alone can bring down the cost of building a two-bedroom apartment by more than $15,000. Development charges in Toronto currently exceed $100,000 per detached home and $50,000 per condo unit. Halving those charges means the cost of building new homes drops significantly. In theory, that savings gets passed to buyers. In practice, developers may keep some of that margin. But even partial pass-through lowers the price floor for new construction. Second, it eliminates GST on new homes. The plan offers a rebate of up to $130,000 on new homes valued up to $1.5 million. For homes between $1.5 and $1.85 million, the rebate decreases proportionally. Ontario estimates this measure alone will deliver $2.2 billion in tax relief support, 8,000 additional housing starts, create 21,000 jobs, and contribute $2.7 billion to the province's GDP. Third, it invests in prefabricated and modular construction. Build Canada Homes will issue bulk orders to Canadian prefab builders to create sustained demand and drive down per-unit costs. Modular homes can be built in factories year-round regardless of weather. They require fewer workers exposed to harsh outdoor conditions, and they can be assembled on site in weeks instead of months. This is where the plan gets genuinely interesting, because it addresses one of the core bottlenecks in Canadian construction. Labor shortages and winter weather delays are two of the biggest reasons Canadian housing takes so long to build. Prefab sidesteps both. Fourth, it targets public land. Build Canada Homes will build affordable housing on federal and provincial public land. This eliminates the land acquisition cost, which is often the single largest expense in any housing project, especially in urban centres. Building on land the government already owns means faster approvals, lower costs, and more affordable units. Now here's where the skepticism starts. TD Economics analysed the plan and concluded that even with all these measures, Canada is unlikely to reach 500,000 completions per year. Their analysis suggests 400,000 might be achievable, and 400,000 would still be a historic achievement. But it falls short of what CMHC says is needed. The labour shortage is the biggest obstacle. Canada's construction workforce is ageing. Over 20% of construction workers are within 10 years of retirement. There aren't enough new workers entering the trades to replace them. Even with modular construction, you still need skilled tradespeople to install electrical, plumbing, and finishing work. Municipal approval processes are another bottleneck. The federal government can fund housing and cut taxes, but it cannot force cities to approve building permits faster. Some municipalities take 2 to 3 years to approve a project. The plan includes the Housing Accelerator Fund, which offers federal dollars in exchange for faster approvals. But compliance is voluntary. Cities that don't participate don't get the money and don't speed up. And then there's the recession. Canada just entered a technical recession. GDP declined in 2 consecutive quarters. Business investment has fallen for 5 straight quarters. Construction activity specifically was one of the drivers of the GDP decline. When the economy contracts, developers pull back. Projects get delayed or cancelled. The federal government can offer financing, but if developers don't believe they can sell the units, they won't build them. The plan also doesn't address one fundamental problem. Canada's housing crisis isn't just a supply problem. It's a financialization problem. As long as housing is treated as the best investment a Canadian can make, capital will flow into real estate instead of productive industries. Building more homes helps. But if those homes are purchased by investors seeking returns rather than families seeking shelter, the affordability crisis persists. Build Canada Homes doesn't include any mechanism to limit investor purchases of new affordable units. It doesn't implement Singapore-style escalating taxes on second and third properties. And it doesn't address the fundamental incentive structure that makes housing more attractive than starting a business. So, will the plan work? Partially. The development charge cuts will lower new home prices at the margin. The GST rebate will help first-time buyers. The modular construction investment could genuinely accelerate building timelines. And the public land strategy is smart and underutilized. But 500,000 homes per year is almost certainly out of reach. 400,000 would be a win. 350,000 is more realistic. And even 350,000 would represent a 35% increase over recent peaks. The plan is the most ambitious housing policy Canada has seen in decades. Whether it's ambitious enough depends on what you're comparing it to. Compared to previous governments, it's a massive step forward. Compared to the scale of the crisis, it's still not enough. Do you think Carney's plan will make homes affordable, or is it too little too late? Drop your take in the comments.